This is a trade recap for Tuesday, March 17th, 2026. What number is this? Number 3, number 4, number 4 of 10 for one and done. Uh, on phase 2. So just kind of a quick rundown on phase 2, working with 2 to 4 contracts. 2 is kind of max starter size, and 4 is max position size. Allowed to reset trades, but no other additional trades. It's kind of the rules we're going with on this one for the 10 iterations, and then increasing size from there, et cetera, et cetera, et cetera. In terms of today's market or this morning's market was kind of like yesterday, was seemingly indecisive, even though we did kind of start with a little bit of a gap up on I think Q's SPY was technically below, so it was a little, again, little similar to yesterday, a little grindy. So we can get that a little bit. But before we get into that, if you are new to day trading or struggling and you're looking for a high level coach or mentor, the person that I would recommend that you check out is Pat Mitchell over at tricktrades.com. He's been in the markets for over a decade, and he runs an education service called Trick Trades for the individuals that want to learn how to do this and do this at a professional level. And he has a program that he's developed inside Trick Trades called SizeUp, and that is what I do. It's a structured approach to learning how to day trade. And basically, through that, you'll learn different pieces of this puzzle, how to implement them to build out that complete picture to where you can become a profitable, consistent day trader. If you want kind of a idea of the content he puts out there, check out his YouTube channel over at Trick Trades, and you can see he's got over 1,700 videos there with a lot of great content. It is the free stuff though, so it's not everything. It's actually, again, quite a bit of detail that Pat goes over in terms of live lessons, and lessons that are, again, reserved for the members of the service that really dig into, again, the nitty and the gritty and the stuff that really moves the needle. So if you're interested in something like that, go ahead and check him out. Do have some links down in the description below if you're interested. Yeah, and I guess let's get into the trading session from this morning. All right, so here's about 10 seconds before the open. Daily charts here on the left, 1 minute intraday charts here in the middle, and order execution on the right. These blue levels you see on the daily chart are the trade plan levels that Pat develops, and once they are struck, they do not change. So as you can see, we're okay with SPY was right on top of this lower level, and there's actually a level below this. I'm zooming in a little bit, getting ready for, again, the market to open. For our typical short longs, we got some resets above and below. We got moving averages. Same with Qs. Qs is kind of gapping up from where it opened. Or see, again, both are gapping up from where they closed last night or yesterday. Moving averages are potentially in play. So just things that we're watching out for. So here we go. So I'm probably going to jump around a bit on this one and speed it up because just like yesterday, it was a bit slow. So in terms of getting into the level and once we were in it, kind of seeing what was going to happen. So it's one of those interesting things. So something to learn from. So as you can see, when we first opened up, Qs was below that level, SPY was above its level. So little can be a little funky there. Qs taking that initial dump out. We're actually looking for that short, but we needed obviously the market to open it to push up into level to make that proper execution. Adjusting my risk level there, noticing the 20. On Qs, SPY is just playing around with that level. We originally wanted that level short and only short on SPY. So it's one of those things where we actually have to wait for it to slice and come back down through it to then potentially test it. to see. We want that confirmation of weakness and stuff like that. But you also see it's got the nine above, so it's one of those things where we're really looking to short the nine because the distance between that level and the nine, not the best per se. And again, with Qs where it's currently trading plus again what other technical levels are around that you could risk off of for the nine, like this things you need to take into consideration. And again, since it was not part of the trade plan, it might as well not exist. So as we get things kind of adjusted, just kind of waiting, seeing everything set up. All right, so Q's starts coming up into the level. Go ahead and enter there with one. Now SPY is now above that nine. Q's is getting above his trend, but again, still got a ways to go up to that 20. So as we push up, and I get some kind of reaction. Question is, it come back through on Q's? There's it simply hold the level. SPY is retesting the nine. It's pushing up a little bit more. Go ahead and added to correct. Was a little late on that one. There's definitely some cleanup there. And we just wait to see, do we get stopped out or we get follow through? So again, just adjusting charts. Step forward here. Comes down. Getting ready to, again, catch a profit. It comes through. Waiting. Didn't quite get it. Again, kind of seeing like, okay, if it were to come down, what would it retest? It's got that level itself plus that pre-market range right there. So that's what I was kind of watching, and it starts again coming up and down. And this is kind of what it did yesterday. It just kind of did that slow grind up, down, up, down, up, down. So again, risk hasn't taken us out. So just maintain again, hold fast and wait. Comes right back down, comes up. Again, you start getting some pullback. Very similar to yesterday's action, kind of just grinding. It's just more of a wall. Then it finally kind of comes up. Whacked it with two right there to correct at the 20. And now basically going to wait and see what happens. Starts coming through. So here's a potential part where you're going to get stopped out and needs to not just break above the level. So you don't stop out like the moment it just dink ticks above it. It's one of those things where it's like you need to actually confirm, wait for confirmation. And if you don't know what that looks like, well, join the service and you can learn what that looks like. So waiting for that confirmation. Not really giving it. Spy's not really ripping. It's not squeezing. It's not doing anything too psychotic to really like be like, oh. So again, being cautious. So may just step through real quick. But I changed my order manager around to load all four contracts because I'm basically gonna give it to the high that it put in there, and if it breaks above that, then I'm gonna stop out. And the interesting thing, because I was actually watching it, it was at 605.88, and I was gonna stop out at 605.89. I was literally watching just the price as it fluctuates. And the highest it ever got from that point was 605.87. I don't recall it hitting. Oh, maybe it did hit 88. Okay, so I actually hit 88. So I got within a penny, a literal penny of me going up, bail the position. This is what confirmation again kind of teaches you. And this is how it kind of keeps you in the trade long enough to again see it through. Because this is usually again like you're on the edge of your seat right now. And it's one of those things where it's like am I about to eat a full get stopped out with a full size position, which again can happen. It's like, take the loss, lock it in, and that'll be that. And then see if you can get a reset trade if that's something you're ready for and do. But it's one of those things where it's like it did not do that. So step forward, try and speed this up a little bit so it's not here. So came down, got that reaction kind of down to that range. So peel one off. That way, again, you got to pay yourself on these reactions, even if it's red. Because if you don't, like, again, this is less about like paying yourself into profitable targets. It's about managing the trade, the risk, and what's going on. So again, drawing on the charts to kind of show like, okay, what should I be looking for? Where are some basically some intraday support levels, where a trend is forming, things like that. And this is all stuff Pat teaches and demonstrates daily. So it's good to be taught by an appropriate person who knows exactly what the hell they're doing. So as you can see, it just keeps muddling along. Keep the levels kind of just move them over. And then again, kind of just comes back down into it. Reacts with it. Okay, so back up right there so you can see that. Comes back down into it. Looks like it's kind of playing with it, holding it. So again, took another one off. Comes through it, again, spy. Still playing with this level. All right, sold the third one. So now I'm holding one. Keeps coming down. And basically, what I ended up doing was because of how the daily chart was reading, how this was reacting, I did hold this one to see what kind of follow through I could get. Because at this stage, I was down, I think it was with the three locked in, negative $73. So I was holding that one. The way this was breaking down again, just like it kind of did yesterday, and where the levels were, and now the daily chart was forming up, I was wanted to see what it was going to do, and I was willing to give it back up into, again, basically the risk levels or the support and resistance levels, the technical levels. With again, if it came up into the actual like 20 again, like definitely bailing on that. And then just seeing what kind of follow through it would ultimately give. And I'll show the entry chart because it took a while. Um, and that was intentional. Did not bag hold it. I was ready to again give it right back up into risk, just to kind of see what would happen. So close this one out. So like I said, it took a while. So here's the entries right here, and you can see one there, one there, two there for building the position up to four, and sold one, sold one, sold that one right before the move. But again, hey, shit happens. And then I was holding that one, and from there it took quite a while, and then finally sold the last one because this thing was looking like it wanted to come down, especially with the way the wicks were forming and everything. So with that being said, like I was down 73 at this point. That one contract brought me to positive 6. So wiped out the entire loss with a scratch green. So yeah, worked. And again, held to it. It was one of those things where, yeah, wasn't looking. Again, was there more profit on the table? Yeah. I mean, shit. I mean, if that wiped out that $73 loss and change right there, I mean, still had another $60 up to the peak. But yeah, again, small thing. You don't need to capture the entire move. Now, the big lesson to take away from this is something Pat was going over live, and that is the being super intentional with your entries. And it's something I've been thinking about basically all morning, and how we need to really, when we're going through our trades and reviewing them, be super meticulous. Like, when exactly did you enter? Like, that exact moment kind of thing. Are you entering too soon? Are you entering too late? Like, and again, and what are the impacts that have on your average? Because he was basically demonstrating that your average can be massively skewed if your entries are sloppy. So it's one of those things where you're wondering why. It's like, why can he take the exact same trade with the exact same size and walk away with a healthy green trade while you're scratched to red? Like, there's something going on there, and that's something I struggle with. I struggle with it even to this day. Um, Part of that is, again, keeping your average tight, which again is a function of your entries. Because if you don't have good entries, if they're not very precise and they're sloppy, again, like, it can shift your average pretty massively. So it's one of those things where you need to take some extra time and really map out, okay, you entered here. When you actually clicked buy and you were filled, was it, exactly where it needed to be? And if it's not, what adjustment needs to be made to get it there? So it's, again, my wheels are turning with that one, trying to process and kind of think through it. And that's probably the biggest lesson I took away from today is, how do you clean that up? And you got to start by, again, taking the data and processing it so you have information, and then taking that information and applying it to, again, what it is you're doing, so you make those little adjustments. And it's one of those things, like, as he says, it's the little adjustments that ultimately kind of clean all this up. And you can't do like a bunch of adjustments to 10 different things. You kind of need to do them one at a time so you can kind of see, because otherwise it can be a little overloading. You're not sure, okay, I made this adjustment. Did I make it appropriately? Or did the result that I'd currently have is that from a different adjustment? So again, it's just one of those things where just one at a time tweaking these things. So something I need to do, and I'm going to do better of, is like really just watching my entries, and again, seeing what I can clean up there in terms of the timing, and being super meticulous about it. Because something there, and that's, again, like I said, it's something I struggle with. Is just, maybe that's why my average isn't as tight as it should be or could be. Um, so yeah, that's interesting. It's very interesting. But again, that's how the day went. So small green, which is, again, considering kind of how the market behaved. Again, it's one of those things where it came right up to a point where it's like literally within a penny of stopping out, held to it, which again, that's a win. Knew exactly to the penny where that level was, or where the price point needed to be to initiate that. So definitely a couple lessons to learn here today, and it'll be interesting to see exactly where the market goes from here, because yeah, it's been a little odd the past couple of days in terms of just the price action, but is what it is. Trade the market you have, not the market you want. But if you are interested in learning how to do this, like I said before, come see Pat Mitchell over at tricktrades.com, sign up for the service, and learn how to do this appropriately. Check out the links in the description below, and yeah, save yourself a little bit of money. And if you need more information, check out his YouTube channel. Other than that, that is all I have for today, and I hope everyone has a good one, and we'll catch you tomorrow for the next one. Have a good one.